and welcome to this week's edition of What's Driving Token Prices. I'm your host, Katie Talati, Director of Research at Arca. For those joining us for the first time, I'm responsible for identifying and analyzing digital asset and blockchain opportunities for Arca's funds. As part of our research, my team and I examine token prices and the market events that act as catalysts for price change. Over the past week, here's some notable token price movements and what we think drove these moves. As a reminder, this commentary is not intended to be investment advice, investment research, or an investment recommendation. Please consult your investment professional for your own circumstances. All right, guys. So thank goodness not as crazy a week as last week. I don't know if I could handle any more, exchange settlements with the DOJ, and absolute madness. But got some exciting stuff this week. Some things I didn't mention in the long form write-up or in the individual tokens, but I talked a bit about DYDX last week. They officially launched trading of their V4 chain yesterday. They've got incentives. You're seeing a ton more volume go through to the chain, which is awesome. We saw CZ from Binance also announced that he, in addition to stepping down as CEO, he's also stepping down from the board of directors of Binance and just going to have a purely economic role in the company going forward. Wormhole announced today a $225 million funding round at a $2.5 billion valuation. Reminder, if you forgot, Wormhole was the bridge to Solana that was hacked early in 2022 to the tune of about $400 million, and kind of was the biggest, I think, bridge hack that we had seen to date. Okay, but let's get started. Let's jump right in. First up this week, let's talk about Tornado Cash. Okay, so Tornado Cash is the decentralized mixing service. It saw its token delisted from Binance on Monday, which sent the price down over 50%. The delisting is really kind of what we think is part of Binance's promise to right the ship following last week's settlement with the DOJ. Tornado Cash has long been, a target of law enforcement, especially since many have, said that its main purpose is for criminal activity. For those who aren't familiar with what a mixing service is in crypto, you can basically track any transaction anywhere, right? Because you can see everything on chain. So even though you may not know the owner of the wallet, a lot of the time, law enforcement is able to track how coins get moved around, and they're able to then track the ultimate kind of owner of whatever criminal activity is going on. A mixing service essentially does is they put coins in from multiple different groups, and then they mix them up because even though coins are fungible in the sense that you can replace one for the other, if you throw a bunch of, it's the idea of you throw a bunch of quarters in a bag and you shake them. There's no real way to tell them apart afterwards or who owned the quarters originally, unless I guess two quarters have serial numbers. Never mind. But the point is that's kind of the general idea of how Tornado Cash works. Obviously, something like Tornado Cash, it's going to be attractive for criminals to use. But the Tornado Cash has also been a big use case, not just for laundering assets, but also for users who want to avoid people tracking and tagging their movements. One example was famously given by Ethereum founder Vitalik, when he said that, when he likes to make political donations, he puts his money through a mixer first because he doesn't want to have the crypto world judge him for what political contributions he makes. So there's a lot of privacy concerns, obviously, in digital assets, and this is one of kind of the services that has been around a long time to prevent that. So kind of out of this, Tornado Cash has really been the only privacy technological on the market to date that's been super successful and useful. But here's hoping with the DOJ enforcement action, there is going to be, there's still a need for the, privacy services in digital assets. And I think that's potentially an area that is set to grow for next year. So with that, Tornado Cash's token Torn is down 53% for the week. Okay, next up, we're going to talk about Kyber Network. So I don't think I've talked about Kyber before. They are a DEX protocol, kind of aggregator. They offer a bunch of different services. Oh, we're still on Tornado Cash. The Kyber Network suffered an exploit last week of over $50 million across a bunch of different chains: Arbitrum, Optimism, Ethereum, Polygon, and Base Networks. So details of the exploit are still unknown. There are some on-chain detectives that have managed to root out that this is a very complex exploit, and that it was, performed it was very well thought out and planned. And the target of the hack was a specific feature of Kyber's called their concentrated liquidity pools. So the Kyber team's already offered a 10% bounty to the hacker for returning funds. And more and more now we are seeing with some of these exploits that hackers are more willing to accept a white hat bounty of 10% of stolen assets instead of just keeping all the money for themselves. Despite all this, Kyber's token KNC is only down 5.9% for the week. All right, next we're going to talk about TON, or TON Coin. So yesterday, gaming-focused venture capital firm Animoca Brands announced that they will invest in the TON ecosystem, which will provide gaming in the TON ecosystem, which right now is promising lots of gaming apps, and it'll also become a validator on the network. The team behind the messaging app Telegram created TON Coin, previously known as the Open Network. Toncoin recently resurfaced with a renewed focus on gaming following its settlement over its 2018 ICO. The hope is that Telegram's 800 million users will bring a lot of eyeballs to Toncoin's upcoming apps. With this news, though, Ton has, it's up quite a bit in the last couple weeks, but it's only up it's down 40 bips this week. All right, last up, we're going to talk about Illuvium. So Web3 gaming studio Illuvium launched its first game, Illuvium Arena, to the public yesterday. It is available on the Epic Games Store, which is the second largest game distribution channel. And that's just a general gaming distribution channel, not crypto specific. So really great to see some of these crypto games kind of proliferate the mainstream a bit more. Illuvium was co-founded by Kieran Aaron and Grant Warwick. These are the brothers of Kane Warwick, the founder of DeFi protocol Synthetics. They have been the game has been in production for 2 years, so very, very excited to see it released. This is a significant milestone for both the studio and Immutable X, which is the gaming focused layer 2 that the game is built on. 2 additional games, Illuvium Overworld and Illuvium Beyond, are expected to launch in Q1 of 2024. Illuvium has been compared over time to Axie Infinity, which was they released their token I think about 3 years ago, and they've been very successful, but obviously had a lot of ups and downs based on their play to earn model. Unlike Axie, Illuvium is not going to have a play to earn model. They're going to have a model where users can stake the token and earn more ILV from in-game revenue that is produced. So we shall see what that looks like now that this game is on the market. With this, Illuvium is up 6.3% for the week. All right, that's all I got for you guys this week. I hope you enjoyed our insights. Tune in here again next Wednesday at 1 p.m. Pacific to hear what's driving token prices.